All right, where is Toronto real estate headed? Good question, and things are definitely a lot more unpredictable lately. CMHC just dropped their forecast for 2025 to 2027, and even their predictions are all over the place, which does go to show how much uncertainty we're dealing with. But here's the thing, just because things are uncertain doesn't mean there is no opportunity in Toronto real estate. It's actually the opposite. And the key here is really to understand what's happening, spotting the opportunities, and making moves based on facts. So let's break it all down. But before we do me a quick favor, hit that like button, subscribe for more real estate investing tips, and if you are ready to explore your own Toronto real estate investing journey, feel free to book a call with us. Let's talk about interest rates first. If you look at just the headlines, you will see that Canada's inflation ticked up in January, going from 1.8% to 1.9%. But here's the thing, if you look at inflation without factoring in shelter costs, it's only at 0.9%. So as you can guess, at this point, inflation really isn't a major concern anymore. What's really taking the spotlight is the economic uncertainty, and so the Bank of Canada is looking at broader risks these days, like the impact of tariffs and overall economic conditions, rather than just focusing on inflation. And with all of this unpredictability, even though markets are still expecting rate cuts this year, when this will happen becomes a little bit more murky. Right now, there's about a 1 in 3 chance that we can see a 25 basis point cut in March. And CIBC, for example, is leaning towards a cut in March, but does warn that tariffs could throw things off course. On the other hand, BMO doesn't see a cut in March unless something major happens. So with all of this in mind, you're probably wondering, what does this all mean for Toronto real estate? Well, rate cuts are definitely coming still, but even if they do fall as predicted, don't expect prices to jump. Lower rates do provide some relief, but the reality is that our economy is still very shaky. And so in the short term, things will likely stay slow. Now, when you look at CMHC's price forecast for Toronto, it's pretty clear that we're not going to see massive surges in price anytime soon. Buyers aren't jumping in like they used to because there's a lot more uncertainty. And here's where it gets interesting. Houses, for example, single-family homes or low-rise multiplexes, are definitely seeing more action. Both end users and investors are gravitating towards these types of properties because they offer great cash flow and plenty of potential to add value. Condos, unfortunately, are a different story. There's a ton of new supply hitting the market. Cash flows are deeply negative, and without strong demand from end users, condos are likely going to remain soft for the next few years. And so if you are looking to invest in Toronto right now, condos are probably not it. Another thing to keep in mind for real estate investors is that rents are probably going to dip more, especially with all these new condos coming onto the market. But if you do have a variable rate mortgage, then those rate cuts could help offset some of that dip and give you some breathing room. Now, if you look a bit further down the line, things could get even more interesting. Housing starts will continue to be slow given where we're at right now. And with steady demand for low-rise homes, we're likely going to see prices for houses start to rise again in the longer term as supply continues to tighten. So while the near term might be slow, the long-term prospects for low-rise houses does look more promising. And given all of this, where should you be looking at right now if you want to invest in Toronto real estate? Well, I'm going to be straight with you. The best opportunities are still in cash flow. Properties that can generate strong rents and strong positive cash flow. And here's what you need to know. First, if you're looking at condos, I'd say pass. There's just too much inventory coming onto the market and it's mostly investor driven. Cash flows are negative and the appreciation potential is just not there. What you do want to focus on are single family homes, duplexes, or even triplexes. If you can find a house with a basement or apartment, that ends up being a safer bet compared to a single family home just because you get better rents with 2 units, which does help you carry the property better. But perhaps the best option that we prefer right now for the best risk-adjusted returns is a triplex. You get 3 units of rent, which gives you the best positive cash flow. Yes, the trade-off is that triplexes do tend to attract fewer end users, which does mean lower valuations compared to 2-unit homes in a hot market, but the cash flows that you are getting are much stronger. And then if you end up adding a laneway suite or a garden suite, that's just the icing on the cake. This will give you even stronger cash flows and value add lift. And now that we're on the topic of value add lift, here's where things get interesting. If you can find a property where you can convert a single family home into 2 or 3 units and add that laneway house, you are actually in a great position to get really strong controlled returns. Converting a single family house into 2 or 3 units could give you 100 or 200K in value add lift. Adding a laneway house that could cost you around 400K could give you 200K in value add lift. And these kind of projects are aligned with what the government is trying to do, increase low-rise housing. And as you've seen, they're offering incentives like HST rebates, waiving development charges to encourage this type of development. And so if you are investing alongside with what the government wants you to do, it ends up being a much safer bet. The bottom line here is that even though the market's uncertain right now, there are still very solid opportunities for smart investors in Toronto. As long as you're focusing on cash flow or looking for value add opportunities, you can still make really strong returns in Toronto real estate. You just need to know where to look and make sure you're investing in the right type of properties. And if you're still unsure about the best direction for your investment, that's where we come in. Our focus is on helping you make the right decision when it comes to multiplex investing in Toronto. We don't just rely on guesswork, we base everything on solid data and facts. Whether you're looking for a fully renovated turnkey property or one that needs work, we'll guide you every step of the way, making sure that you make the most informed choice. Here's how it's like to work with us. First, we'll take the time to understand your needs and goals. Then we'll dig into the opportunities and the numbers to help you find great properties and eventually buy the best one for you. From there on, we'll connect you to trusted contractors and offer ongoing support as you manage the project. And then once your renovations are done, we can also help with leasing and property management too. Are you ready to get started? Just head over to this link here and let's chat.